Welcome everybody to Webinar 777, the global leader for life-changing webinars to empower dreams and transform communities. The title of today's webinar is The Secret Currency, and our guest speaker is Tom Barrett. As the founder of Christian Financial Concepts, Tom is passionate about educating Christians to make wise and successful decisions in matters related to giving, financial management, investments, and asset stewardship. The secret currency is something that very few Americans know about. It's beyond the reach of any government. The world's wealthiest families have used it for generations to build even greater wealth. But regular families can take advantage of it too. The secret currency is a form of gold, but it is not a typical gold investment. It's like gold, but much, much better, with a far greater potential for rewards. For more than 30 years, Tom Barrett has been considered an expert in the field of biblical finance and methods to protect wealth. You will enjoy hearing Tom explain how you can protect your family and grow wealth for the kingdom of God. I'm Dr. Joseph Peck, and I'm passionate about helping people like Tom share their God stories, ideas, and gifts with the world, because webinars are life-changing and they're the new global interactive TV. I'm also passionate about empowering dreams, and I believe that Tom's message can play a vital role with that as people build their wealth and they're able to give to others to empower their dreams as well. Today your life will change forever. Your mind is being expanded to the dimensions of new thought, and it will never retract to its original size or shape. So welcome, Tom. Thank you so much for agreeing to share your important message with our audience today.
Well, thank you, Dr. Joseph. I appreciate that very much. I'm looking forward to sharing with you people, and I usually take questions at the end, folks, so feel free to type them in as we go into the question panel, or write them down, but we'll actually answer them at the end, even if you put them in the panel now. Let's get started. As Joseph said, most Americans don't know anything about this currency. Fortunately, it's beyond the reach of any government in the world. And as he mentioned also, the world's wealthiest families have used it for generations. I mean, this is just a small list of some of the families that have used the secret currency and made millions and even billions of dollars. The Rothschilds, the Onassis, the Hunt family, the DuPonts, the Adams family, the Hopkins, Hetty Green, the Fruit family. I could go on and on. This is what the wealthiest people have used as a means of wealth building. But regular people like us could take advantage of it too. You don't have to be wealthy to take advantage of the secret currency. It's a form of gold, but it's not your typical gold investment. It's, for some of you, it's something you've never heard of before. Others, you may have heard of parts of it, but we're going to put it all together for you tonight and show you the best way to make a gold investment. It's like gold, but it's much, much better, and it has a far greater potential for rewards. Couple of statistics. From 1972 to 1974, the secret currency rose 348%, while during the same period the stock market dropped 34%. From 76 to 80, it rose almost 1,200%, while the stock market lost 35%. From 1987 to 1989, it rose 665%, while the stock market went on a wild roller coaster ride. I can sympathize with that guy there on the roller coaster, because my wife and daughter, when we go to amusement parks, love to go on those things. And it scares me just watching them. You wouldn't catch me dead on one of those things, just like you wouldn't catch me investing in the stock market at the high levels it's on right now, today. The last time Salomon Brothers, now called Salomon Brothers Smith Barney, brokerage firm, included this vehicle in its annual survey, the secret currency ranked #1 for the prior 20-year span. And it had a very, very impressive annual return of 17.3%. Not too many things get that kind of return, particularly over a 20-year period. So in simple words, this was the single most profitable thing you could have done with your money over that 20-year time span. So it's something you should know about, right? Chicago Tribune had a story on the Salomon Brothers study, and they stated that the secret currency beat stocks, bonds, gold, silver, artwork, diamonds, U.S. Treasury bills, real estate, and oil. These are all different asset classes, as they're called. But as an asset class, the secret currency beat all of them. These are your typical investments that people invest in these days. So why haven't I heard about it? And more importantly, why hasn't your financial advisor told you about it? We'll get into that in a little bit, but keep that question at the top of your mind. You could make hundreds or even thousands of percent with this. This is possible because there's a defect in our financial system. And believe it or not, the defect was created by the U.S. government. It wasn't something that just happened. It wasn't a crack that developed because of stress. It's something that was deliberately done by the government. Now, why am I so sure about all this? Well, basically, if you want to know how to be sure about something, you have to start with things that are certain. Let's just go over a couple of the things. One thing that is certain, one thing that we can bank on, is that the Federal Reserve System, must keep on printing money. It's committed to inflation, and it will print as much money as necessary to prevent deflation. It's almost like a hamster on a treadmill. They can't back off on continue to print money, because if they did, our system would collapse. As Joseph mentioned, for 37 years I've been in finance, and I've taught in colleges and churches, and I've taught at almost all the money shows, the international money shows, the Kingdom Economic Summits. And I hear people all the time talking about inflation, and it's clear to me that they don't understand what inflation is. They think that inflation is rising prices. Well, that's not the case. Rising prices are a symptom of inflation. But inflation is what it says. It's an inflation of the money supply. More money is being pumped into the economy. Like the Fed gave itself permission to print $85 billion every month, as long as they feel like it's necessary. So as the balloon gets bigger and bigger and bigger and bigger, it gets harder and harder and harder to control. So this is why I laugh when I see these talking heads on CNBC and Bloomberg and so on. They're talking about, well, this move might be inflationary, or it might cause deflation. Folks, there will be no deflation, because the reason the money supply is going up is not just because the Fed's printing. I do a whole webinar called The Evils of Fractional Reserve Banking, but our banking system in this country and almost all Western countries today is fractional reserve banking, which means simply that the banks only have to keep a fraction of the money that people have deposited with them on reserve. The rest of it they can loan out on credit cards, with penalties and stuff. They can charge as much as 20% on those, and they're paying you 0.75% per year. That's how they make their money. So if they left the money just sitting in the bank, they wouldn't be able to make the big bucks that they do. So they keep a fraction, usually about 10% in most countries, of the money available for people to withdraw and so on. The rest of it is loaned out. Now, when they loan that money out, they're actually creating new money. So those of you like me that have complained about the Fed printing money, creating money out of thin air, guess what? You've been guilty of doing the same thing. You didn't even know it. If you've ever taken a bank loan, if you've ever taken out a mortgage, remember the bank only has 10%. So where does this other money come from? As you sign that contract for the loan or the mortgage, you and the banker together have colluded in creating the money. So if somebody takes out a $100,000 loan based on $10,000 in deposits, the extra $90,000 was created out of thin air. I know this sounds crazy, but if you do your research, you'll find out that's exactly what happens. As a matter of fact, the Chicago Fed published a white paper on this, talking about how great it was that the local banks were cooperating with the Fed in creating more money to help the economy. Bottom line is, as they print money and create money through these means, we have inflation. In order to have deflation, they would have to pull all that money back in. So all the mortgages, all the bank loans that have been made, all the business loans would have to be pulled in and the economy would crash. So Ben Bernanke, the previous Fed Reserve Chairman, made the statement that it is in the interest of the federal government to create inflation because it, in effect, lowers the national debt. And it does. As the money becomes worth less and less and less, the real cost of the national debt goes down. So they're committed to inflation. That's one thing that we can bank on. Okay, so what happens when the Fed prints more money? Well, the dollars become worth less and less until they become worthless. When this happens, what happens to the price of gold? Well, it's not that gold goes up in reality. The price of gold goes up, but the value of gold stays the same. But what happens is it just takes more dollars to buy the same amount of gold. So as the dollar becomes worth less and less and less, it takes more dollars to purchase the same amount of gold. I'll give you a quick example. 100 years ago when the Federal Reserve was founded, gold was $20 an ounce. Today it closed, I think, at $12.44. Okay, did that gold magically become more powerful over those years? No. The dollar lost 96% of its value over the last 100 years, and that's why it takes so much more money to buy gold. Gold itself has been fairly constant for the last 3,000 years. It's bought the same amount of food, clothing, labor, materials, and shelter per ounce of gold for 3,000 years. So here's an example from real life. Over the last 10 years, the spot price of gold, that's the price you see on television, they call it the spot, has risen from $336 to a high of $1,900 about a year and a half ago. So over 10 years, it increased 500%. Well, nobody can tell me that gold itself became intrinsically worth 5 times more. It's only that the dollar has lost value. So as the dollar becomes less valuable, gold goes up in price, and it's the same all over the world. I can show you a chart that shows all the different currencies that gold is priced in, and you'd see that in general it stays pretty much the same all over the world. So what's the best way to buy gold? Another way to ask that, what way of buying gold has the most upside potential and the least downside risk? I've been a pastor and a financial advisor for most of my life. The Lord spoke to me when I started my first church that I wasn't to take a salary. So for a while I built homes and loved it, but that was up in North Carolina in the mountains. When I moved back to Florida, I figured out really quickly that I didn't want to bang nails in 100-degree heat and 100% humidity. And so I thought, what could I do that I would enjoy that is air conditioned? And I'd really gotten interested in investments. I was just in my 20s back then. So I became a stockbroker. Didn't even really know what a stockbroker was. Eventually got certified in financial planning and went through the College of Financial Planning and so on. But what I've seen over and over again with investors is that they get seduced by profits, and they forget that the principles are to find the best upside potential consistent with the lowest downside risk. Well, they get sucked in by somebody that tells them that they can make 10% a month in Forex or 12% a month doing risky things like commodities, and they don't look at the risks involved. And you can literally lose your whole account in 1 month doing those types of things. So I always try to explain to people, you need to look at risk first and then look at profits. And that's a sensible way to look at any kind of investing. So if you never invest in gold, if you never do anything else with what I teach you tonight, apply that principle to any investment that you do, whether it's real estate or stocks or even commodities. Try to find the lowest downside risk and the highest upside potential. And that's what the secret currency offers. So these are not the answer. These are not the ways to invest in gold. Gold futures, which is another way of saying commodities. Gold stocks, Usually people buy the gold miners, but the gold miners do not track consistently with gold. Gold certificates. Certificates are a piece of paper saying that you own a certain amount of gold, but if the financial system collapses, what are the odds that you can be able to redeem that certificate and get your gold? You shouldn't be investing in gold ETFs. ETFs are exchange traded funds. It's a type of mutual fund that can be built around anything, an index, a country, stocks of a certain country. In this case, they're gold ETFs and silver ETFs. I would not even invest in gold bullion. Now, I think you should have some gold bullion. I read an article called the 10-10-10 Financial Survival Plan, which we'll make available to you at the end, that tells you exactly how much silver bullion, how much gold bullion, and how much of the secret currency you should have in your portfolio. But remember that gold bullion is not an investment, okay? It's a hedge. It's an insurance policy. But because it only goes up as much as the dollar goes down, you basically keep even with inflation by using bullion. If you use the secret currency, you're actually making increases in real purchasing power. And that's what it's all about. The safest way to buy gold was actually created by this defect in our system, this crack in the very foundation of our financial system. Before I get into that, I found it quite interesting when I discovered this. An ounce of gold consistently sold for $20 for over 200 years, going all the way back to England, of course, translated into pounds. Gold sold for just about the same price. It was very steady, very dependable for 200 years. And of course, that's not the case anymore because of the crime of the century. When FDR did the most criminal thing that I've seen any president do, he basically stole 40% of the wealth of the United States. American citizens had 40% of their wealth in money, and the money back then was gold. If any of your, nobody's on the line now that lived back then, but you may have relatives that were alive back then in 1933. And they can tell you that their parents, when they went to the store, they bought things with gold. They didn't use paper money back then. People had 60% of their wealth in their homes and about 40% in money, in gold, in real money. And FDR basically stole it. He made it illegal for citizens to own their own money. By the way, this was not done by Congress. This was done by executive order. With a stroke of a pen, FDR created this criminal act. It's been all downhill since then. Like I said, a 96% loss in the purchasing power of the dollar. It takes $25 today to buy what $1 bought back in those days before we went off the gold standard. Now, gold has often been called the fear index because as people get more nervous about the economy, gold goes up. And that's happened for hundreds of years. But the Bible says in 2 Timothy 1:7 that God has not given us a spirit of fear, but of power and of love and of a sound mind. So if gold is the fear index and we're not fearful people, then why buy gold? Well, you should buy gold, but you shouldn't do it out of fear. You should have a rational reason to do it. Because people turn to gold out of fear, I like to make sure that people know that that's not the reason to buy it, because fear is not rational. Let me give you a rational reason to buy gold. It's real simple. Money goes where it's treated best. It's kind of like that old mangy dog in your neighborhood that goes around from house to house. If people kick it and tell it to get away and yell at it and throw rocks at it, it's going to go someplace else. But if it comes to your house and you get some kibble out and feed it, he becomes your best friend. He'll stay there. Money goes where it's treated the best. So let's say that banks are paying 17% interest on CDs. Now, some of you younger people on the line today might say, well, that's a stupid thing to say. Banks would never pay 17%. Well, I'm an old guy. I'm 66, or will be in a couple of weeks. I've gotten 17% interest on CDs. But as I said earlier, the typical interest rate today is like 0.75% to 1% a year. So if you could get 17% on a CD and then you buy into this lie that people say that gold doesn't pay any interest, In actuality, it does because it's going up most of the time, but it doesn't actually throw off a dividend check like a dividend stock would, or interest posted to your account like a CD. So in this scenario, people who don't know about the secret currency, who only know about buying gold bullion, they're going to keep their money in the bank because that 17% is looking good. But what if the bank is paying 0.5% and gold is still paying 0? In other words, buying their argument that gold doesn't pay interest. Money's going to flow to gold. Why? Because the risk is greater with the paper money. Because most people understand that inflation is a cancer that's eating away at the heart of our national economy and our personal economies. So if the interest rates are low, people are going to prefer gold. Why? Because the government can't print gold. It can't just create it out of thin air like it does our dollars. Well, if that's true, and it is, why did gold run from $100 to $800 between 76 and 80? It increased 800%, but it was a high interest rate environment. Well, what's up with that? You know, I just told you that when interest rates are low, gold goes up. But here we had a very high interest rate environment during this 4-year period, and gold went up an awful lot. It's because you have to look at the real interest rate. The nominal interest rate is what they tell you the interest rate is. But if you just look at that short-term interest rate, you're going to make bad investment decisions. You also have to consider inflation. So take an example. Let's say the interest rates are 2%, but inflation is running 5%. In that scenario, the real interest rate is minus 3%. Okay, so if you're making 2% on your bonds or whatever it is you've got, or they tell us that you're getting 2% on your Social Security money. I don't believe that for a minute, but you're really getting nothing on it. But saying that was true, if inflation is 5%, and it's probably higher than that right now, they won't give us real numbers, but there's ways to extrapolate that. You're really losing money every month. And consider this, folks. The bankers are not stupid. They didn't get to where they own billions of dollars worth of assets by being dumb. They will always, always set the interest rates lower than the inflation rate. Okay, here's a real life example. In 1979, short-term interest rates were at 8%, but inflation was 13%. So the real interest rate was a negative 5%. And that's why gold ran from $100 to $800. Because if you just looked at the nominal rate, you'd be fooled. It's making 8%. But when you factor in inflation, interest rates were negative, and negative big, 5%. So that's why gold went up in a supposedly high interest rate environment. It was really low interest rates. Don't want to get too tactical here, but I've got to lay this groundwork before we get to the juicy stuff. Okay, so here comes the Fed. Starting 1980, the then Fed Chairman Paul Volcker declared war on gold. See, when gold goes up, it makes governments and central banks look bad because it's proof that the currency is losing value. So he used all the tools at his disposal and drove short-term interest rates through the roof. By 81, they were up to 15%. And inflation dropped into single digits. And of course, that hurt gold. Bullion dropped, but here's the key. The secret currency did not drop. And this has been the case time after time after time. Bullion doesn't go down that often, basically on average 1 out of every 10 years. But the secret currency never goes down. In the last 100 years, it hasn't had a down year. Look at last year. Bullion gold was down almost 30%. Bullion silver was down 50%. But the secret currency went up. So today, it's deja vu all over again. Interest rates are very near to zero. The Fed has been keeping the nominal interest rate very, very low, and inflation is rearing its ugly head. We're told by the White House that inflation is under control, but you can't just look at the the CPI that they use, the Consumer Price Index, and get a real inflation rate off of that. The fact is that back in Jimmy Carter's days, I mentioned about getting 17% on CDs, the inflation was so bad that they messed around with the inflation calculator, and they took out the cost of food and energy. Okay. Now, I don't know about you, but those are two big things in my budget. By taking them out, they made the inflation rate look a lot smaller. But look at the facts. Gasoline has more than doubled in price over the last 5 years. Food is up 38% in the last 5 years. So if they were factoring those in as they used to, as the CPI was originally calculated to be, inflation wouldn't be 2 or 3%. It'd be somewhere probably 8 to 10%. If you ever want to look into this a little further, if you're interested in such things, there's a website called shadowstats.com. There's no cost to it. And the economist who runs the site puts up the real figures. Like, anybody believe that the unemployment rate is below 7%? Go to Shadow Stats, you'll find out what it really is. It's more than double that. Okay, so it's gold time. Fear is not driving the rush to gold that we're seeing today. It's a rational move. It's what the smartest people are doing. The smartest fund managers, the smartest hedge funds, the smartest trust, the smartest money managers of all types are buying gold. But we need to buy the right kind of gold. We need to buy the secret currency. So, what is the secret currency? It's simply investment grade gold. We refer to it as IGG. These are rare gold coins that are old enough to make them valuable. So they have to be old and in good condition, and most important, they have to be rare. The more rare something is, the more value it gets. Believe it or not too long ago, a U.S. penny auctioned for $18,000. $18,000 for a piece of copper that you would not even bend over to pick up off the sidewalk. But it was because it was very, very rare. And it was in good condition. Now, over the last 40 years, IGG has outperformed bullion by 700%. It's made 7 times the money of bullion. And, we talked about earlier about how well bullion is done. Matter of fact, straight up for 12 years without a down year at all until last year. And it'll probably go up again this year. We're going to see gold at $2,000 an ounce, not too far down the road, I believe. But investment-grade gold over the last 40 years has done 7 times better than bullion. Now, here's why. The fact is that the price of gold changes, but the value of gold never changes. Okay? I mentioned earlier, for 3,000 years, gold has bought the same amount of stuff. Well, let's look at one example. In 1910, you could buy a 3-bedroom, 2-bath house for $4,000. Wouldn't you like to buy about 10 of those today? But $4,000, when gold was at $20 an ounce, like it was in 1910, works out to about 200 ounces of gold. Well, go forward 100 years, the same 3.2 is selling for $240,000. Gold is at $1,200 an ounce, so it's still 200 ounces of gold. Now ask yourself this question. Is the house on the right worth 60 times as much as the house on the left? Of course not. It's still a 3.2 on an average size lot. It didn't magically sprout an Olympic-sized swimming pool and double tennis courts and horse stables. It's still a 3.2. Both of these houses, by the way, are new houses with all the most modern amenities of the time. So why did it cost 60 times as much? It's because the dollar became worth so much less. Now, ask yourself the same question about that 200 ounces of gold. Did the 200 ounces of gold in 1910 that cost you $4,000 actually become worth 60 times as much? Because it cost you 60 times as much 100 years later. And the answer is the same. It was because of inflation, because of the dollar becoming worth less and less and less, that the 200 ounces of gold was worth so much more money. So bottom line, if you'd invested $4,000 in gold or $4,000 in real estate, 100 years later, you've pretty much broken even with inflation. You didn't lose anything, but neither did you make anything. If you had invested the same $4,000 in investment grade coins, you'd be up over $2 million by 2010. Of course, nobody be around for 100 years, but if one of your grandparents bought it and willed it to you, you've made a lot of money. Another example, this is a 1965 Mustang at the top. That was the first year Mustang came out. Mustang with all the bells and whistles, everything they had to throw at you, cost about 50 ounces of gold in 1965. In 2010, 45 years later, it still costs 50 ounces of gold. Here's another example. In the time of Christ, a stonemason, a skilled laborer, was paid in silver, but it was the equivalent of 1 ounce of gold for a week's labor. In our country in 1776, a stonemason was paid $20 a week, and that was the price of an ounce of gold. And today, a skilled stonemason makes about $1,200 a week, which is roughly what gold is selling for. It's a little higher than that right now. So basically, bullion gold protects wealth. It protects you against inflation. These are two classic bullion coins, the Kruger End and the Canadian Maple Leaf. They're nice looking coins, but the fact is they're just gold. Nothing wrong with gold, but they're never going to make you real money because as they go up in price, the dollar goes down, so your purchasing power doesn't change. If you buy $10,000 worth of gold, and let's say the dollar drops in half in value, you'll have $20,000 worth of gold, but because of inflation, it will buy you $10,000 worth of today's stuff. Now, if you take that same gold and put it into an investment-grade gold coin, you'll find that it both protects you, like bullion does, but it also creates wealth. And that's what I'm interested in. Raise your hand if you're interested in seeing your wealth increase. I don't care about becoming the richest man in the world. I do care about making money for the sake of the kingdom. Because of the things that I've learned, I've been able to give an awful lot, far more than I ever thought that I would when I was much younger. Okay, I mentioned that for the last 40 years that investment-grade gold has outperformed bullion dramatically. If you look at the far left, you see $10,000 there in white. That's your original investment. If you put it in the Dow Jones Industrial Average, or a broad-based stock market index, it grew to $105,000 over that 40-year period of time. Well, sounds good, doesn't it? 10 times your money. But when you factor in inflation, you actually lost 2/3 of your purchasing power if you were in the stock market and just in a broad-based index. Not to say that you couldn't have made more than that by buying individual stocks if you're skilled in that sort of thing, but most people aren't. If you bought gold bullion, it grew to $320,000. Well, now you're cooking with electric. $10,000 to $320,000. That's 3 times as much as the stock market. But believe it or not, although you didn't lose money like you did in the stock market, you didn't really make much of anything. Inflation was up 30 times, gold was up 32 times. So you did okay. But basically you broke even, made a little scrap on top. Now, if you go to the gold bar on the far right, investment grade gold went up to $680,000. That's an index called the PCGS 3000. It's a widely known and respected index of rare coins, investment grade coins. But that's 2.5 times what bullion did. I told you before it did 7 times. Well, frankly, I didn't have room on the screen to fit the high grade investment grade coins. Those went up to $2.5 million, 7 times as much as bullion. The reason they went up so much more than the index coins is because these are the best of the best, very, very rare coins, which is the kind of coins that we recommend. Investment grade gold is safer too. This chart shows the number of down years of different asset classes. Remember I talked earlier about asset classes. These are types of assets that you can categorize and compare one another to. I was a little surprised to see that real estate over the last 51 years, according to the Case-Shiller Index, had actually lost 51 out of the last 100 years. Because I made a lot of money in real estate in the 80s. I was buying real estate with 10% down and it was going up 10% a year. So if you pay 10% down, you make 10%, you just doubled your money, 100% return. And we were making millions and millions of dollars in real estate back then. I wouldn't buy real estate today, knowing what I know at this point. But at that time, when real estate was really climbing, and if you leveraged it like I did, you could make a lot of money. Treasury yields. We're talking about U.S. Treasury yields, of course. When I tell people this, they say, well, I thought Treasuries are like the safest investment around. Well, 47 of the last 100 years, the yields on Treasuries have been down, almost as bad as real estate. Stock market has been down 33 of the last 100 years. Okay, so any given year, if you invest in the stock market, you have a 1 in 3 chance of losing money on it. Matter of fact, as high as the stock market is today, as overextended as it is, I'd say you probably have more like a 1 in 1 chance of losing money if you got in the stock market today. But that's another story. Dividend stocks, because they pay dividends, even in years when the stock itself goes down, the dividend could push you over into profitability. So only 18 out of 100 years. And as I mentioned, bullion gold has been down 10 of the last 100 years. But look at the last line there. Investment grade coins haven't had one down year in 100 years. And it's probably a lot more than that, but that's as far back as we have good, accurate data for. So I asked the question earlier, why doesn't your investment advisor tell you about investment grade coins? Why is it a secret? Well, it's not so much a secret as it is just not known. People don't hear about it because your investment advisor can't make a commission on it. And believe me, he or she is not going to advise you to buy anything unless their firm can make money on it. And a lot of firms, matter of fact, most firms these days, you'll actually get fired if you recommend to a client that they buy something that your firm doesn't sell. So if you tell them, we'll put part of your money in real estate, that's a biblical principle, by the way. Ecclesiastes 11:1 and 2, don't put all your eggs in one basket. But stockbrokers are going to tell you, put all your money in the stock market. Why? Because that's the only way they make money. It's like if you go down to a Chevy dealer and you say, I need a 4-wheel drive, and you describe what you're looking for, and the salesman recognizes right away that what you're really looking for is a Range Rover. But if you go down the street and buy a Range Rover, he doesn't make any money. What's he going to do? He's going to advise you to buy whatever Chevy he's got that's closest to that. Okay, so he'll put you in a Tahoe or something. This is why, people are sort of captive to their investment advisors. That's why it's smart for you to get on webinars and get learning outside of what your advisor is telling you, because he's not going to tell you about things that he knows can make you money if he can't make money on it. Either he doesn't want to or he is not allowed to. When I was a stockbroker, I told my clients about gold, and the president of my company called me up and threatened to fire me if I ever did it again. Okay, why is investment grade gold better than bullion? Well, that's the best question tonight. It's because gold bullion has one kind of value, while investment grade gold has two. The two types of values are the intrinsic value, or the bullion metal value. Okay, that's all bullion has. But investment grade coins give you the safety of the metal, but they also have an extrinsic value, or the rarity value. And that's where the serious money is to be made. That's what makes it more profitable. So what makes the difference? Well, basically it's grading. There's a lot of technical stuff involved, and we don't have time to go into it, but what it boils down to is good old-fashioned American ingenuity in marketing. It's one thing we've always been good at as a nation, is marketing ourselves and our stuff. In 1986, the modernization of the American rare coin system started. PCGS, the logo on the left, Professional Coin Grading Service, was started in 86. A year later, in 87, NGC was started. Both of these companies, it says 27 years, has actually been 28 years now. Because of these companies, U.S. coins have gone up thousands of percent in the last 27 years. It's just been an amazing run. But Europe is still in the Middle Ages. Okay, they're still grading coins on the old 4-point grading system. See, 28 years ago, all coins, U.S. and European, were graded on the 4-point system. Fine, very fine, extremely fine, and uncirculated. But today the U.S. has this sophisticated 70-point scale, and Europe is still the Middle Ages. But that's changing. PCGS has opened an office in Paris. NGC has opened one in Zurich. And they've started grading coins in Europe. The difference between our experience in this country and Europe's is that they're starting grading using the more sophisticated 70-point scale. And as coins start getting graded, we're going to see critical mass reached. When old Heinrich in Germany and Jacques in France realize their friends are getting 50% more for their rare coins than they are, they're going to spend the $29 to get their coins graded. The experts are telling us that this critical mass, where 50% or more of the coins are graded, could take place in less than 5 years. All right. So what took 28 years in the United States, they're saying is going to take 5 years. And the reason for that is that when we first started grading coins here, we were using a 4-point grading system. And even when the 70-point Shelton scale was invented, a lot of the dealers and collectors said, no, it's too complicated. So they wouldn't go for it. After a while, they were persuaded to go to an 8-point grading system and then a 20-point grading system. And finally, they got the 70-point system. And that's when coins really started taking off. Well, our buyer, Greg Holloway, has been in this business for almost 44 years now. And he used to buy exclusively American coins, made millions of dollars doing that. Today, he doesn't buy any American coins. Matter of fact, hasn't done so for the last 6 years because they're overpriced now. They've risen so dramatically, thousands of percent, and they plateaued. During that same period of time, the European coins haven't had a down year either, but they just haven't gone up as much. And right now, you can buy European rarities for 10 cents on the dollar of what the U.S. coins are selling for. But in 5 years, you're going to see those coins up hundreds of percent. People always tell me, well, boy, I wish I could go back in time, get in a time machine and go back and buy some European rarities at the prices they were, 28 years ago. Well, you can. In 1986, both U.S. and Europe, their rare coins in Europe and the U.S. were worth the same. But at that time, there's very limited pricing or grading data available. So coins didn't take off. In 2014, in the U.S., our coins are now worth 10 times what the European coins are worth. But remember, they used to be worth the same. If you had two coins, one from Europe, one from the United States, in the same condition, in the same rarity, they sold for the same price back then. But now the U.S. coins are, the market is highly modernized. There's very sophisticated pricing and grading data available, and the prices is just zoomed up. In 2014 in Europe, the rare coin marketplace is in its early stages of development. There is very limited pricing and grading data available. Practically none was available before. But you have an incredible opportunity to buy gold coins at 10 cents on the dollar. I'm going to wrap up here and in a second and take questions. But I wanted to offer you this. This is a Zimbabwe banknote. It's the largest banknote ever issued in the history of the world. $100 trillion. Now, quick story on this. In the year 2000, the Zimbabwe dollar and the U.S. dollar were almost exactly equal. It was $1.25 Zimbabwe to $1 U.S. So very, very close. 4 years later, they're printing these $100 trillion bills, which are only worth 3 cents U.S. So that's when they started lopping zeros off. But basically, the whole country was ruined. And this is the future of the U.S. dollar if we don't hire conservatives. So let me put in a plug for the election. Hire conservatives, hire people that respect the Constitution or at least have read the Constitution. I really wonder sometimes if some of the guys in Washington have you ever read the Constitution. I say frame it and hang it. These things only cost me about $10 a piece. I buy it, a couple hundred at a time, and I give them away when I go speak in seminars. And they could be worth some money someday. Some of the German hyperinflation notes from the early 1900s are worth thousands of dollars today. They're in good shape, like these are. These are mint condition. And these could be worth a few $100 someday, but that's not why I give them away. I give them away because I want people to remember the danger our money's in if we don't get off this track of debt, 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 debt. Anyone who sends me your contact information, just write in with your name and your telephone number and your zip code. We will mail you one of these Zimbabwe banknotes. They're much more striking in person. I think you'll enjoy them. Okay, how can I take advantage of this opportunity? Well, first of all, you can go to goldenarttreasures.com/JP. goldenarttreasures.com/JP. There's a lot of great information. There's a video there. There's frequently asked questions. You can learn a lot there. Other ways you can do it is pick up the phone and call. The telephone number is there on the screen. Write it down. Or you can write to rarecoins@att.net. rarecoins@att.net. And that's also the email address you'd write to if you want to get your Zimbabwe note. Remember to put your name, your telephone, and your zip code. It's very important so we know which time zone you're in. All right, here's an action plan. When I teach in business seminars, when I preach in churches, I don't like to give out information. I like to give people an action plan that they can follow. So here's your plan. Number one, protect what God has given you with precious metals. At least 10%, a bare minimum of your portfolio should be in precious metals. Okay? If you already have gold or silver, get a portfolio evaluation. We'll do it for you for free. You tell us what types of gold and silver you have, and we'll give you a real close estimation of what they're worth. And also we'll help you look at how to configure your portfolio to where you got the proper balance of gold bullion, silver bullion, and investment grade coins. I also suggest that you request the Gold Education Starter Package. This is a package of articles and videos that, again, is free, but will help you greatly to understand precious metals. I promise you, if you go through everything in the Gold Education Package, you will know more than 90%, maybe 95% of all the financial advisors in the country, because they're just not trained in this stuff. And finally, read and follow the 10-10-10 Financial Survival Plan. Don't have time to get into it right now, but it is critical for you to understand the information that's in that article. If you write to rarecoins@att.net, we will send you the Zimbabwe note, and if you request it, the article and the Gold Starter Package. Okay. You need to send your mailing address, not just your zip code, because I can send the package through the email to you, but I cannot send that Zimbabwe note through email. Okay, here's some common sense from the Word of God. Be sensible and store up precious treasures. Don't waste them like a fool. That's Proverbs 21:20. All right, let me leave this on the contact screen and invite you to put your questions in. Just type them in the control panel. Let me turn it back over to Dr. Peck.
Thank you, Tom. I really appreciate what you shared. This is so important. Let me go ahead and ask these questions, Tom. What is the minimal investment someone can make to get into investment-grade gold?
Well, we don't make any requirements. I mean, some people say, what is it, minimum 10,000, 20,000, whatever. No, we don't do that. But there's a practical break point, and that is that to get a decent rare coin, it's going to cost you around $2,000. So if you only have 1,000, you don't want to cut a rare coin in half. So you probably want to buy maybe some junk silver or something. At least do something to get started. But 2,000 will be a practical minimum.
Okay. Where is the gold actually stored?
Well, we believe that the main reason for having gold is that there's going to be an economic collapse. The dollar is going to crash. And when it does, if you don't have gold or silver, you're going to be in very, very bad shape. So we don't store it here. When you get gold through Golden Art, we ship it to you. You can either put it in your safe or in a safe deposit box or bury it in your backyard. Just put it someplace where it's safe from theft and also from another possible gold confiscation. I wouldn't put the government past it.
Okay. What percentage of someone's investment portfolio do you recommend investing in investment-grade gold. You had on 10%. I saw our minimum 10%.
Right. Well, the 10-10-10 financial survival plan addresses that. It's really the first number, the first 10, represents the amount of your net worth, including your house and everything you own, all your assets minus all your liabilities is your net worth. At least 10% of that. For the last 37 years that I've known of, almost every financial advisor has recommended 10%. Now, some people today are recommending putting 50% in because the danger is a lot greater today than it was 37 years ago. So I just tell people, look, pray about it. If you're someone who thinks that there might be hyperinflation in this country, that all the debt might catch up to us and it might happen in 5 or 10 years, then the minimum of 10% is plenty. If you're somebody like me, I don't see any way, the more I study this, I don't see any way we can avoid a crash. Then you might want to be thinking about 50%. And if you're somewhere in between, 20, 30, 40%. Basically, the way I look at it, it's God's money, so you pray about it, and He'll tell you what you should do to protect what He's given you.
Okay. How long does someone have to hold on rare currency gold, investment-grade gold, to make a profit?
Well, we suggest a hold time of 5 years, but that's not necessary. And we've had people that bought coins wanting to hold them for 5 years, but ended up having financial challenges and needed to sell part of their coins. We're always buying and selling. We're like a market maker. And so just give us a call, and we'll work with you on that.
So you originally helped them purchase it, you shipped the coin to them, and then if they wanted to sell it, they would come back to you again too.
We hope that they will. We're not like the timeshare guy, Joseph, that once he gets your signature on that document, he hopes he never sees you again because he knows that tomorrow that timeshare is going to be worth half of what you just paid for it. We know these coins are going up. We know they're going to make big profits. So we're always happy to have them back in the family. And I didn't tell you about the third type of value, but I'll just mention this briefly. If anybody's interested, I can send them information more in detail about it. There is a third type of value, and that's a collection value. There are thousands of types of rare coins. We only buy 6 of those types. And we buy a lot of varieties within those 6 major categories. But the reason we buy these is they're the ones that are going to go up the most, and because we're building collections within those types of coins. So that is a third type of value and can double or even triple your returns if you're in the right collection.
What are your fees or charges for your service?
Everything is included. When we give you a price per coin, everything's included. We don't charge add-on commissions. We don't charge for shipping. We don't charge for insurance. I don't believe in nickel and diming people, so everything is included. And the way we can do this is, when I was a stockbroker, I used to hate for my customers to have to pay commissions. So what I did is I would buy what's called buying between the bid and the ask. So let's say that the stock is offered at $55 and the bid price where brokers are buying it back for people is $49.50. I would work the trade till I got it for the $49.50, so that in effect they weren't paying commissions. So basically that's what we do. Our buyers are expert coin graders. We buy the coins raw. They're not graded, and so they grade them with their eyeballs. They know that this coin's going to grade as an uncirculated 62, and then when we send them in and it comes back graded that grade or higher, it makes the coin more valuable. We had a coin a lady bought. Now, don't take this wrong, folks, because we have lots and lots of coins and less money in this, but it's just one example. I mean, we've just in the last week we shipped out coins that cost from $2,000 to $10,000. But anyway, this one lady bought a very, very, very rare coin for $75,000, and we estimated it would grade as MS62. Well, it turned out grading MS64, and that increased the value of the coin by $25,000. So we didn't charge a penny extra. We still charged the $75,000. She got a $100,000 coin. So what we do is by grading them and knowing how they're going to grade, we're able to buy them cheaper. And also we buy millions of dollars worth of coins at a time, so we get economies of scale. So we can sell them to you for what you would pay for them at retail if you went over to Europe and knew what to do and bought them yourself. We can provide them to you at the same price, and it includes all of our cost.
Does the same principle apply when they're selling?
There is a commission to sell. We're figuring most of these coins are going to go up hundreds of percent, and we're charging 10% when we liquidate them. And everybody ever talked about this said, well, that's fair. You know, if you're smart enough to get us into coins that'll make us money, then you're certainly smart enough to sell them and get the best price for us. And if I'm making 100, 200%, I don't mind you making 10%. So that's our business plan. Joseph, I see Randy Simmons who works with me. He's one of the people that helps people with their portfolios and so on. I see him on the line. Do you mind if I just reach out to him and see if he has any questions?
Please.
Hey, Tom, Joseph, good to hear you all.
Yeah. By the way, folks, Randy's from Texas, so if you need translation, I'll be happy to translate.
I guess I ought to keep in mind my audience, right?
Yeah.
Well, Tom, you did a great job tonight, and questions. Well, Joseph, I think you covered a lot of the questions that most people ask. You know, one that I get a lot, and I think that's probably worth addressing a little more is, and you touched on it in the webinar, but if we have an economic collapse and we lose the dollar, which is most people who are keeping tabs on all this think that we will likely lose the dollar as the world reserve currency. What effect will that have on our economy in the United States? Well, it will probably be devastating. And so in saying all that, a lot of people ask, well, if I believe in precious metals, I want to buy gold and silver because I think it's a hedge against inflation, confiscation, and just the loss of the dollar. I don't quite get how the rare coins will work in that environment. This is a question I get a lot. So, Tom, and I'm sure it's on people's minds, can you address that?
Sure. I address it in great detail in the article, the 10-10-10 Financial Survival Plan. That article took me months to write, and that was several years ago, and I've revised it several times since then to make it more clear. It's only 4 pages, but there's a lot of stuff packed in there. But basically, it tells you what you're going to need for the emergency and what you're going to need for long term. But I think the underlying question there is, people often will say to me, well, if the economy collapses, then won't the rare coins be worth just their gold value? And that's a good question. The fact is that has never happened. In every financial emergency, from the French hyperinflation in 1789 to the German in 1919, the World War I, World War II, the Great Depression, which was called the U.S. Great Depression, which actually within 6 months spread worldwide. In all of those situations, collectible coins were the only asset class that went up. Everything else, real estate, stocks, bonds, you name it, dropped. Currencies, commodities. But in the Great Depression, there were more millionaires created than in any other time in U.S. history, and a big part of that was with collectibles. So why is that? Well, think about it this way. Let's say that you own the Mona Lisa. Nobody can even tell me how much it's worth. There's a lot of estimates, but let's say it's worth $25 million, probably a lot more than that. If the price of canvas and oil paints dropped, do you think the price of canvas would drop? Of the Mona Lisa would drop? No. That's just the raw materials. The real value of the Mona Lisa is the artwork and the rarity of it. Or if you had an antique Bentley and the price of steel dropped, would that affect the price of that car? No. Well, it's the same with rare coins. If the economy collapses even if gold itself goes down in price, the rare coins continue to rise. So that's why it has been such a remarkably stable investment all the way back into the 1600s. That's when the first rare coin market was started in London.
That's good.
Well, thank you, Tom. Someone's asking, a friend is asking, would I be able to hear this program again with my wife or for my wife?
Yeah, absolutely. We record all webinars. As a pastor, I've many times seen the biggest problems that people will have in their marriages or disagreements over money. So I believe everybody should be on the same page. So you should go through these materials together, and we'd be more than happy to send you the recording.
Now, are you going to send a link to the replay to all those who registered?
I can do that, sure. I can have my staff do that first thing tomorrow.
Okay, well, I'd like you to do that.
All right.
And how do people in our audience find out more? You know, if they want more details, you had mentioned some other resources.
Well, on the screen there, the rarecoins at att.net, that's the easiest way. You can always feel free to call me. But rarecoins at att.net, send an email and tell me what you want. If you want the Zimbabwe note, which is really cool, I'm running short on them. I'm having a hard time finding them now, but probably next time I'll buy only be $20, but it's a neat thing. Make sure you send your complete mailing address, your telephone number, and then tell me if you want the 10-10-10, if you want the gold education package, the Zimbabwe note. Just let us know what you'd like, and we'll take care of it. Make sure that you include name, address, telephone number, and zip code.
Okay, so if someone wants the 10-10-10 Financial Survivor Plan, they need to email that address, rarecoins at att.net. Is that correct?
That's correct.
Okay.
And that's actually also in the Golden Art Starter Package, so you might want to just go ahead and get that, because that also has a beautiful, beautiful piece that our numismatist has written that has pictures of a lot of the great coins of the world and so on. So you might as well just get the starter package rather than just the article.
All righty, so the email that. Randy, do you have any other questions you'd like to ask?
No, I think you covered and did a very good job, Tom and Joseph. You with the questions. You know, I'll make one comment that I just have observed, and you know, historically, we have learned that during times of economic downturn, that collectibles are really the only asset class that goes up in value. That was true during the Depression era. It's been true around the world in many other economic downturns. And with that in mind, I was listening to Fox News recently, and they had a lady from Christie's auction house, which is the high-end auction house in New York that sell many of the world's best collectibles. And she was on there, they were interviewing her, and she made the comment. She said, once again, we are seeing the wealthy of the world buying collectibles. And they were talking about it in reference to, where are the wealthy putting their money. So when I heard that, it just really confirmed and substantiated, this whole, golden art strategy. Because there's someone on Fox News from Christie's auction house saying we've had record years the last 2 years because we're seeing people once again buying collectibles. And anyway, I thought that was appropriate for what we're doing. So guys, thank you very much, and Joseph, thanks for doing this and hosting, and we hope that it's been a good service to your people.
Joseph, let me just mention one other thing here. I mentioned the word collectibles, and Randy mentioned it, and it occurs to me that some people might not really know what that word is all about. I mean, we have a vague idea, But basically, collectibles are rare things. It could be anything from a duck decoy to a Fabergé egg, Oriental rugs, whatever. But I didn't point this out earlier. This is what's called a coin slab. It's from NGC, the Numismatic Guarantee Corporation, and this is another one from PCGS, the Professional Coin Grading Service. These coins that are slabbed means they've been graded by an independent third-party grading service, and you see they have a hologram there on the back to prevent fraud and counterfeiting, and they have a barcode here, and then all the information about the rarity. Now, most collectibles are going to be sold after getting an appraisal. Okay, so let's say you have a painting or an antique, Joseph, and you bought them 5 years ago, and you had them certified by an appraiser. I'm probably not going to take that appraisal from you at this point in time. I'm going to want to have a fresh appraisal. Why? Because the painting could have been exposed to humidity, and I'm not an expert in painting, so I wouldn't know that. The antique, say you had a Louis XV envoy, it could have gotten scratched. And it might be a minute scratch, but it could make a difference of thousands of dollars in the value. So I'm going to want to see that redone. Now, these coins that are in these slabs, like you see here on the far left, they never have to be regraded. Okay, we've had coins in here that have been changed hands 5 or 6 times in the last 28 years since they were first graded. And they're in a ballistic plastic container that both protects the coin, but also protects the authenticity of the process. And so we don't have to worry that somebody has taken a valuable coin out and put a counterfeit in there. Because if you even try to open these things up, it cracks all over the place and falls apart, and no one will accept it. So this has caused the U.S. coin market to go up dramatically, but it also makes it easy to liquidate, to buy and sell, to not have to worry about whether something has changed in the value. The other thing that makes this type of collectible so much better than the other types is portability and concealability. Every time there's been a major financial emergency, we've seen people, like particularly the Jews, have had to move from one nation to another, cross borders. They would sew rare coins in the hymns that are clothes, so that they could transport their wealth with them. And today, if we have rare collectible coins and we're in an area that gets unsafe and we need to move, we can literally put our wealth in our pockets and go. You can't do that with a painting. You can't do that with an antique piece of furniture. So they're portable, but they're also concealable. If you've got a large painting and somebody wants to come into your house and steal it, it's going to be pretty easy to find. They're big. There are a million places in the common house where you could hide rare coins that nobody would ever find them. So portability, concealability, if there's a crash, they're going to be the 2 key words, and these types of coins basically are your answer to that problem.
Well, thank you. This has been a wonderful presentation, Tom. I've enjoyed it. I'm sure all the people who are alive have enjoyed it, and those that listen to this in the future will too. Really appreciate what you're doing, your heart, your motive for doing it, and for people who have the assets, it certainly seems wise to me to invest part of their portfolio, into these rare investment-grade gold. And like you said, the European rare gold coins are about 10% of the value of the U.S. ones, and at one point they were equal. So it really sounds like it's literally a gold mine.
Like a golden opportunity.
Golden opportunity, yes. So anyway, I want to thank you for sharing your expertise. I know you are an expert. I encourage those of you who are interested to follow up, to send an email to touch base with Tom. you can call him too. But anyway, just schedule a time, talk to him, and just let him answer your questions directly. Some of those might be personal questions. But I just want to thank each of you for participating, for investing your time, your most valuable resource to listen today. I encourage you to, when you have a link to the replay, to let others you care about know about it so they can at least be aware. It can be on their radar screen. But to me, it seems like a no-brainer for those who have financial resources to invest invest part of their portfolio in these. So thank you, Tom, so much. Thank you, Randy, for being a panelist on the call too, for the questions you asked and the comments that you made. Just blessings to each and every one of you. You now know what the secret currency is, and so you are more aware. You can make wiser choices. Remember, don't put all your eggs in one basket, and diversify. Blessings to each and every one of you. This concludes our webinar. Goodbye. I look forward to connecting again in the near future.
Thank you for inviting me, Dr. Peck. Good night. God bless you.